Hello, that's better. Hello and thank you for joining us this afternoon. My name's Astrid Raetze. I'm a partner at KPMG and I'm the Australian head of Fintech for KPMG, so here in that capacity. I'm joined this afternoon by Neil Slonim, Anne Scott and Helen Gordon, and I might ask each of you to begin with if you wouldn't mind introducing yourselves and your organisations. Neil?
Thank you, Astrid. Hi everyone, I'm Neil Slonim. I'm not from Fintech, I was originally from banking, and now I'm an unpaid, unauthorised voice for small business owners in Australia. And as a not-for-profit online resource centre, thebankdoctor.org aims to try and help small business owners deal with the myriad of challenges they face in funding their businesses.
Thanks, Neil. Anne?
Hi everyone, my name's Anne Scott and I'm from the Australian Small Business and Family Enterprise Ombudsman. This is an independent statutory body that advocates for small business issues, whether it be government legislation, regulation or big business practices. In 2016 we did an inquiry into small business bank lending, that subsequently some of those matters are being raised in the Royal Commission at the moment. It led us into a barriers to investment report that we did with the Treasury, and then onto this piece of work about transparency and disclosure in the fintech industry.
Thank you. My name's Helen Gordon. I have the privilege of representing the Australian Finance Industry Association. Together with our team, we have been in existence for 60 years, but we rebranded, relaunched as the Australian Finance Industry Association in September last year. We're unique to this country in that we do not represent or advocate in relation to an institutional bias. Our value proposition is we are strong. We are strong as an advocate because we don't represent on an institutional bias basis. We are strong as an advocate because we represent people that operate in both the consumer and the commercial markets. We are strong as advocates because we represent people regardless of the channel in which they come to their customers through. And we're strong as an advocate because AFIA is about financing Australia's future. So as an organisation, what we're out there to do is to be fair in relation to our stakeholders, to be fair in relation to our customers, whether they're consumers or business, including small business. We try to provide insight in relation to what we do. So when we do lobby, when we do speak for the industry, we try to talk from a position of operational understanding or a statistical basis so that we have a conversation with people to educate them in relation to how important providing finance is to enable people, whether they're consumers or small business or big business, to achieve their dreams. And what we're about is bringing what are fierce competitors in the marketplace together to arrive at a position as allies where they can take forward, with that strength of voice, that position to the government. So that's what AFIA is about, and thank you for the opportunity to join you today.
Thank you, all of you. Now I understand that a report was produced in February between the Bank Doctor, Fintech Australia and SBNFE Ombudsman. Could you explain to me what that report is about and in particular what the outcomes of the report were? Neil?
Sure, thanks Astrid. So about 3 years ago I started looking at the fintech sector because as a small business advocate I really saw that fintechs had the ability to fill what we all call the SME credit gap. And the more I looked into it, the more I became convinced that this was the way of the future for small business owners in Australia. But at the same time, I struggled to understand how small business owners could differentiate from the vast range of offerings that were available. And I thought, well, I'm a person with 30 years banking experience and I struggle. What would it be like for the time poor and financially unsophisticated small business owners? So I thought what should happen is I'd like to do a survey of the lenders in the sector, find out what it's all about and write a report for small business owners to help them work their way through this important emerging sector. I pretty quickly found out that as an individual I wasn't capable of ensuring that all lenders would participate, and then any findings that I might have would be unenforceable anyway. So as a result of that, I reached out to Fintech Australia and also to Kate Carnell and Anne, and they immediately, willingly agreed to collaborate on this initiative, which I think's been a fantastic exercise between the industry that is looking to self-regulate, a regulator that supports this emerging sector as an alternative source of funding for small business owners, and a little advocate like me. So we spent a good part of a year developing this project. The survey was completed late last year. We had a roundtable event led by Kate Carnell in December. Arising from that, there was a number of initiatives that were established, and I might hand on to Anne to briefly summarise what those initiatives are.
Great, thanks Neil. Yes, so following on from the banking inquiry work that we did, I take the point earlier that was raised about regulation, and we certainly hope not. So the point really here is that small business protection when it comes to lending is very, very limited. There's a limited role for ASIC, unlike consumers and investors. And so largely we have very much welcomed the industry-led self-regulation route that has come about from the findings of this report. And in talking to ASIC, the cornerstones of what we're looking for are things like an industry code of conduct or a charter of practice that basically provides guidance to the industry on where it needs to be consistent, and the core principles around lending to small businesses. It also looks at comparative measures, and again we've decided to take balance sheet lending as a first in principle look at what metrics would enable good transparency and disclosure and comparative metrics for a business to decide what best suits it. And again, how you can get transparency around the cost of the loan, any hidden terms that are in the contract. So the other important measure here would be that contracts are simplified. So we all know contracts with their legal terms can be very confusing, and this is to simplify it so that small business borrowers understand exactly what they're signing up for. There's no hidden clauses, there's no hidden terms like penalty fees and things like that that people don't understand. With that would be a glossary of terms where again things are defined across the industry, so comparative terms are easy to do. And then looking at compliance with the unfair contract term legislation that came into play in November 2016, and making sure all the contracts comply with that legislation with ASIC. And then looking at how effective complaints and external dispute resolution can be handled. And they would be the cornerstones of good lending practice for the small business industry.
Thanks, Anne. And Helen, now turning to you. There's a lot of regulatory change that's happening at the moment across the financial services industry, and obviously there's a lot of focus on the Royal Commission, which we've heard about a couple of times today. What else do you think potential small business lenders and or fintechs might want to think about when lending to SMEs?
Well, I think what they're thinking about is what we're hearing, the themes coming out of the great work that's being done through the collaboration of the ASBFEO, the Bank Doctor and Fintech Australia, what we're seeing coming out of the Royal Commission, but what we've seen come out of a range of inquiries for some considerable period of time. A key theme is trust, and in that is transparency. So in terms of where we're going, we are talking about industry actually taking a leading role. Industry in relation to small business lending, and again we're pretty unique in this regard. We have a working capital division. We have entities that offer the whole range of working capital solutions for small business. Small business regulation, I take the point, is not as regulated as the consumer side of the market, but it is driven by customer selection, is the point I'd make. So in terms of customer expectations, customer standards, our working capital division is aware that it needs to provide solutions that actually work fairly for its small business customers. It also, in doing so, is taking the learnings from the consumer part of the market. The consumer part of the market had forced on it a requirement to come up with a key fact sheet in relation to home lending as an example, so that what the government was trying to achieve was a single page that enabled people to have clearly, in a standardised way, take key information about pricing as an example, and to be able to use it as a comparative tool. Again, we're looking at that from a small business perspective, picking up the themes that are coming from the report. and we're looking to take up the ability for industry to effectively self-regulate. What we do see, though, is in the same way the consumer part of the market, you've got to be a little bit careful. So the consumer might pick up something and think it's comparing a principal and interest loan to a interest-only home loan. In the same way, we're kind of saying it's important for small business to be able to understand that it's considering a loan, an unsecured one offered by a digital player, for a term less than 12 months as one example, they make a comparison with something similar rather than a comparison with another product that might be differentially priced but achieves a different perspective or objective. So we're trying to come up with a way of disclosing that actually enables that small business owner to really understand. I think Lisa in one of those presentations talked about being data rich but insight poor. So that's kind of from our association point of view, we're saying, yep, it's important here to come up with a form to allow the small business operator to understand what they're getting into, but also be able to understand exactly what that product offering's all about. The other things that we're kind of also working towards is it's more than just putting the information in front. Again, looking at the consumer learnings. Unless the consumer has some kind of understanding, some comprehension, and this is where the financial literacy program in Australia is going to become incredibly important, particularly given that we are all being driven. I asked one of my colleagues, has everyone been talking as quickly as this all day? I mean, the fintech, everyone nowadays, you name it, you know, if you're on that kind of communication device for more than a nanosecond, you're wasting your time. You know, you only have to watch your kids, they flick, and if you ask them, you know, have you actually taken that in? They have. They've taken in whatever information they thought was relevant from that snap, and on they're gone. This is kind of everyone, we've got this drive, and this is about self-regulation, it's about meeting community standards and expectations, it's about industry taking the lead to actually achieve what they're trying to do, and that's service their customers in the way they want to be serviced.
Thanks, Helen. We've had a number of questions come through from the audience, so I'm going to turn to some of those now, and I'm going to try and combine a couple of them. Was there actually clear consensus among industry participants that there was a disclosure issue, and will the report be made public? Which question seems to have disappeared, but I'll add it on anyway.
Well, I'll answer those two questions. It'd be fair to say that there wasn't clear consensus between the lenders in relation to the survey, which incidentally is available publicly, and you can find it on the Ombudsman's website as well as mine, as well as Fintech Australia's. Yes, one of the questions was of the respondents of the lenders was, do you think the current levels of transparency and disclosure in small business fintech lending is adequate? And the results were pretty well evenly divided, and I guess that would give you an indication of the challenge that faces fintech lenders in coming together in order to achieve self-regulation. But I think from my perspective and from the Ombudsman, I think from everyone's perspective, we hope that can be achieved, and we're currently working on that, and by the end of June we hope to be able to release again publicly some updated information on that.
Thank you, Neil. Anything else to add? No? Two of the other questions were around who do you think would be likely to end up regulating SME lending to the extent it ends up being regulated as opposed to self-regulated, so which is related to the question about what will it have any teeth if there's no COP?
Do you want me to go first? Okay. What we're really hoping is that this industry-led initiative will mean that regulation won't be necessary. One of the issues with the National Consumer Credit Protection Act was a hue and cry, and the reason why the bill didn't get through, so the bill was actually drafted, was that it would put up the price of small business lending. So one of the things we're very conscious of is the already significant barriers to investment for small to medium enterprises in Australia, and we're talking here about 98 to 99% of businesses in Australia have a barrier to investment. And so if we're talking about productivity in our economy, any other barrier to investment is probably not going to be that helpful. So what we're trying to do is get a calibrated balance between hopefully self-regulation where trust can be built, and I think there's a golden opportunity for the fintech industry to do this, without the need for a policeman to come in and regulate. And then possibly the impact it has on the consequences of the cost of finance. And that's the very careful balance that we want to tread.
So can you elaborate a little bit more about your collective views on the effectiveness of self-regulation, particularly bearing in mind that a number of financial industry groups have engaged in self-regulation in the past to greater or lesser effect?
Maybe I'll start and leave the others to follow. I think where we start is really from this position of community standards and expectations. And where we differ is not many years ago, in fact not many months ago, what was the appropriate standard for the majority of entities that operate, whether in the financial services sector or elsewhere, were they complying with the law, with the legal requirements? How industry segments, and again, if we can talk about the brokers in the mortgage market, how they try to differentiate themselves, they did try to, through their associations, create codes of conduct to enable them to say, look, people that kind of complied with this are complying with more than what the law requires, and enable integrity to be given, if you like, by dealing with that person through that channel. So what codes of conduct were all about were actually, in self-regulation, was enabling an industry, a market segment, to be able to differentiate themselves from a customer relationship point of view and say, we don't think strict legal compliance is all that's required, we think something more is required in order to service your needs. That's, again, there's still opportunity here, there's still a great opportunity, and that's what we're looking to harness for the digital lenders to actually commit to a standard above what the legal requirements would be. The challenge is it's happening in an environment where no longer are you being judged against your legal compliance, strict legal compliance, you are now being judged against community standards and expectations. And arguably what that will mean will be the next worst behaviour that occurs. So we're seeing these rogue kind of operators bringing down market segments and the whole industry being tainted from that. So I think the challenge for industry is to, and I'll pick up the James Shipton's point in terms of not just trust anymore, it's trustworthiness. So actually having a professional kind of support in relation to what you're trying to do, have integrity in what you're trying to do, and have a professional pathway, if you like, for the people that are looking to sign up to the code to actually acknowledge that culturally it is something that they will live by, not just them as a CEO level, but them, the whole organisation, because they understand where the customer sits in relation to it all.
Yeah, and I think sort of some independent review of integrity, especially when things are starting up, whether the Ombudsman has an ongoing role there, I'm not sure. But the key thing about the Ombudsman in the inquiries we hold is unlike the many, many other inquiries and recommendations that have been made in this space, we don't set the recommendations aside for somebody else to do. And so the Ombudsman is free to still continue making sure the implementation is meeting the needs of small business lenders in the future.
There's been a lot of talk today about customer focus, and I think Stuart earlier on alluded to this and the challenges that might arise from the Royal Commission. And I note there's a question about how would the fintech sector go if it was under scrutiny by the Royal Commission. And my response to that is in some areas not very well. And I think the fintech sector as a whole needs to be a little bit careful in passing comments and judgment on the position of the banks. In many respects, the big four banks are much more transparent when it comes to SME lending than the fintech sector. There are some practices within the sector that need to be addressed. I don't mind naming them, they're covered in the report, but they include things like enabling small business owners to really assess the true cost of finance. There are other areas that lenders need to look at. Anne mentioned the unfair contract terms. having a loan agreement of 40 pages that includes things like non-monetary financial defaults, material adverse changes for a small amount, small-term credit contract, say $25,000 for 6 months, is not, in my view, responsible lending. So I think there's a number of these areas where the industry needs to step up. My objective has always been to enable a small business owner to readily be able to answer 3 questions. Is this the right product for my needs? Do I know how much exactly it's going to cost me? And do I know I can't get a better deal elsewhere? And on behalf of small business owners around Australia, and I think Kate would support me on this, small business owners are entitled, they have a right to know the answer to those simple questions, and the fintech sector really needs to step up the mark and provide information that enables small business owners to answer those questions. And that's truly what customer focus is all about. So I think it's a great opportunity for fintechs to actually walk the talk. We've seen what happens when the banks don't walk the talk. No one wants the fintech sector to end up with a reputation like the banks, particularly the small business owners of Australia who need fintech small business lenders.
Can I just add on to that? So, the banks do a lot of talk but not much walk. The other important thing, there's some questions on contracts here as well. So you'd be aware that there was the unfair contract terms legislation extended to small business. That legislation was passed in 2015 with a year allowed for industry to prepare. So ASIC is the regulator in charge of financial services. So in November 2016, we found that the Big Four banks' contracts did not comply with that legislation. And we've worked collaboratively with ASIC and the Big Four since then. ASIC have recently issued a report providing guidance to the rest of the financial services sector about how you need to look at your contracts. And ASIC will then be doing a review across the financial services sector to check that contracts comply. So areas where there are clearly unfair contract terms in contracts now need to be looked at and addressed to comply with that legislation.
So very quickly in the remaining time that we've got, what would you envisage will be the consequences of someone who's signed up to your code of conduct failing to meet that code of conduct?
Well, it's not my code of conduct.
The code of conduct to be prepared in line with the report you've written.
I'll leave it for others, but the role of the bank doctor is to stand up for the little guy, and we will be calling out that behaviour.
Ditto the Ombudsman.
I think we're looking at it from the wrong way, is how I would describe it. You know, I think this is a great opportunity for industry to take the lead, and I think we should be allowing industry to take the lead to actually come up with a mechanism that enables small business to make choices that they understand. You know, for every action there are consequences. You know, undoubtedly for any code of practice, however, there will be consequences. Arguably for entities that look after their reputation like those in the room, a single bad headline is more of a consequence for them than anything in any code of practice. So for me and for the industry, the other comment I'd make is, you know, we talk about small business, we talk about unfair contract terms, but you know, for some of the major banks dealing with a regional bank, you know, they're dealing a large with a small, a regional bank dealing with another entity, a fintech entity are dealing, you know, large to small. So there's this kind of, you know, where you fit in that spectrum of small is actually dynamic. So I think everyone, you know, the small, medium, large is really, it's fallen by the wayside. I think what industry needs to position itself, and again, as an association we're trying to do, is have the customer as the central point. And, you know, are you doing the right thing by that customer, whether they're a consumer or a corporate or whatever?
Okay, thank you. We're out of time, and thank you very much for your attention.